what would a financial survival kit look like? What is in that kit, and what can we turn to in times of emergency? There's a lot of uncertainty in the world at the moment, and that uncertainty ranges from big geopolitical issues that are in the news all the way down to the low-key stuff with things like unemployment that's going up and persistence of climate change and all sorts of other things that keep people up at night. And ultimately, we might not be in a situation where suddenly it's a day zero Armageddon event, right? But we might be in a situation where suddenly the world becomes a bit more tricky and a bit less safe and a bit less certain. Hello, everybody, and welcome to the Mouthy Money podcast. This is the first edition of the 2026 podcast. You might have seen a couple of episodes that we recorded over the festive period that I wasn't a part of because I was away on paternity leave, but I'm back. And I am joined as ever by my good co-host, Chris Chu, who is Head of Consumer Finance at PR and Communications Consultancy, MRM. Chris, hello. Happy New Year.
Hi, Ed. Happy New Year. You're surprisingly sprightly. What's going on?
Very sprightly. My toddler is back at daycare and I am not chasing him around anymore while my wife sits on the sofa with a newborn, is the long and short of how my day's going today.
Well, congratulations, obviously. I know I've said it before, but it always bears repeating. I'm delighted for you. And hopefully the sprightliness continues into what's going to be a fun-packed year.
Thank you. Yeah, we've got lots planned this year, but we've got, I think, a bit of a fun topic to get us started. So we're joined today by Ollie Popham, who is a senior sales manager at Cavendish Online, which is a protection brokerage. Ollie, welcome to the podcast. Thank you for joining us.
Thanks for having me.
Now, Ollie, we've got you on because you know your onions when it comes to things like life insurance and protection and that sort of stuff. We're going to get into that, but there's a reason why we're kind of talking about this. And Chris, do you want to sum it up for us, or shall I do the honors on this occasion?
Well, I'll do my best because you're delving into the dark recesses of my paranoid mind here, Ed, a little bit. But you and I were talking, weren't we, in the last couple of days, listeners? We'll let light in on magic. We do talk outside the pod, and the subject. There's a lot of sort of, let's say, mad stuff happening in the world out there. Let's just keep it as vague as that. And the subject of bug out boxes came up. For anyone who doesn't know, for the uninitiated, Ed, a bug out box, as I understand it, is where you would keep all your emergency equipment and provisions if something were to happen, like the national grid were to go down for 7 days, or food supply chains were to be disrupted, or just something, would happen where you can't rely on the usual rhythms of, living in 21st century Britain. Is that fair?
Yeah. And it's going to perhaps surprise you to hear, Chris. I don't know. I mean, I live in quite a rural area, and I will tell you freely that I have actually got my own little bug out box.
Right. Okay. So this, what is in it?
Okay, so it's stuff like torches, little lamps, batteries. I don't have food. I'm not like a survival prepper with 10 years worth of cans in the garage.
You can't eat batteries, Ed. What if it goes really badly wrong? What are you going to do?
I've got things like water filters and like water purification tablets and that sort of stuff. It's very much like a bit of a mindset thing, and you can spend quite a lot of time on internet forums learning about slightly strange stuff.
Yeah, because I think I'm going to buy lots and lots of tinned food as of tomorrow, but based on our conversation. Okay. I think my cellar's going to be full of stuff that's going to last until 2030. I don't know.
But look, I mean, you can get into quite sort of strange territory with this quite quickly, but I think we're not here specifically to talk about bug out boxes and actual physical survival stuff. What we do want to talk about, though, is what would a financial survival kit look like? What is in that kit, and what can we turn to in times of emergency? Like you say, there's a lot of uncertainty in the world at the moment, and that uncertainty ranges from kind of big geopolitical issues that are in the news all the way down to the kind of low-key stuff with things like unemployment that's going up and persistence of climate change and all sorts of other things that kind of keep people up at night. And ultimately, we might not be in a situation where suddenly it's a day zero Armageddon event, right? But we might be in a situation where suddenly the world becomes a bit more tricky and a bit less safe and a bit less certain. So, Chris, with that, what's the very first thing you're putting in your financial survival kit?
Well, I think we've touched on it a few times, and I've got a little bit of a financial buffer in terms of cash buffer, right?
Okay.
Which is there although it's in a bank, so it's not actual cold hard currency. So if, a cyber attack means that I can't withdraw the money, I'm kind of screwed. But there's talking more generally about sort of, uncertainty, and if, something were to happen that would affect my income or whatever, then I've got enough there to kind of keep keep us going, keep us rolling until I come up with another
Why-
solution. So that's number one, I think.
That's why you need some gold sovereigns buried under a paving stone in the garden. That's should we're
Link
back
to a
on that
previous
one.
episode there. Link to a previous episode will be in the show notes, listeners, where Ed lost his mind.
Yeah.
Anyway, there we go. Yeah.
I think, look, that's the most basic one that everybody turns to, right? Is that savings buffer. And obviously it's difficult for people to be able to necessarily have a lot of cash sitting around. That's potentially quite a tricky way of looking at it. What else would we have in a survival? I mean, my really, really probably not good one in the past. And look, I have managed to build up a bit of savings now, but in the past, my survival strategy was for a financial emergency, just whack it on the credit card kind of thing. And that's a very fast and loose way of creating problems that you probably want to avoid. But it is potentially there, for some people. What else might you include, do you think? Can you
do you
think
know
of
what?
anything?
Actually, I had an example so I got a little bit unwell over the just before the Christmas period. And I wouldn't necessarily say it was an emergency, but, I had some issues with my ears. And basically the NHS was overwhelmed with, the demand. We had quite a particularly virulent flu season and things like that. So I still wouldn't have seen somebody about that. Until 3 weeks hence, basically. And so I was lucky enough that I was able to use sort of a private medical insurance that we have in place to be able to go and see someone about that. And they told me that actually this particular flu season was attacking a certain part of people's hearing systems, and that if it was that was causing it, that there was a 6-week window for me to be seen and to be treated, or it could lead to permanent hearing loss in my right ear.
Goodness.
So being serious for a minute, that's probably a little bit too much for change of gear, listeners, sorry. But you're like, well, that actually came in really handy. And I wasn't entirely sure that we had that. It was through work, actually, that I was able to kind of arrange that. And those guys were super helpful in helping me to do that. But, that's an example there, I suppose, of like, well, actually, if things do start to break down or if something becomes overwhelmed, having other options there to kind of help you address that is important. That was one, I think, where I was really kind of mindful of that and aware of that. And like, well, that's come in super handy and actually could have had major ramifications for me if it wasn't there. So, I think slightly differently about that now.
Yeah, we're getting into the territory, and Ollie's waiting very patiently for us to get to his expertise area. But I think that's a really interesting point, in that the general thing about insurance actually is that's what insurance is for, right? For different scenarios, it helps protect you against a disaster. Now, that could be home insurance, where you have a storm and bits of the roof come off or a pipe bursts. Or it could be car insurance and, all the kind of pitfalls that come with that. Travel insurance, all those different kinds of insurance that probably should be part of your kind of financial survival kit. And this is what the thing I like about insurance, and this is what we're going to come on to with the more general income protection side of things, is insurance is a product that's there for you so that you don't have to have large amounts of cash sitting around for the sudden event that may happen where your roof falls over, your roof falls in, or you have this and that happen. And that's why these are actually really important parts of any kind of financial survival kit. And crucial, I call them. Well, sometimes it's compulsory with things like car and home insurance, but definitely very important. So I think that brings us to, what I'd say about, and look, Ollie, I'm sure you've got an idea about this now. I'd say life insurance and income protection more generally. We're going to look a little bit about those products. Perhaps underappreciated as a part of this kind of what we're talking about, this kind of toolkit. What do you think, Ollie?
Yeah, I think so. A lot of people will automatically lean towards life insurance first. The most products generally that we speak to clients about is life insurance. People are really concerned that if they pass away, what are they leaving behind to their loved ones? They don't want to leave their mortgage debt to their loved ones or other sorts of debts, or they want to leave a lump sum for their children. But I think something that doesn't get thought about quite so much is what happens if I'm unable to work due to an accident or sickness. Because that is, although we're all unfortunately going to pass away at some point, there's actually a much higher chance of anyone being unable to work due to an accident or sickness above and beyond claiming on their life insurance policy before that term has ended, because most life insurance plans end by the age of 90, right? So there's always that chance you're going to outlive it, especially when most most people, won't insure themselves up until that age. Generally, it might be 60, 65, retirement age, that sort of thing. Yeah, income protection is a product that's probably not spoken about as much as it needs to be, because we all know people that have been, unable to work for a period of time due to an accident or sickness, and statutory sick pay might run out, for example, and then they're left, with basically not much money coming in to support all their household bills, etc. And that's when it becomes quite life changing, especially if they've got a young family who, might have swimming lessons every week or trampolining lessons, what have you. It's not just a mortgage that doesn't get paid; it's literally everything that's at risk. So the income protection product is a really key product, which I think most people needs to consider.
Yeah, and that's the thing with income protection, and this is the reason why people might not get it, right? Is a lot of the time people will come up against it or experience, the process of it perhaps when they buy their first home, and that will typically people be in their 30s maybe. And when you're that age, you probably don't think you're ever going to get sick, or assuming you're already in good health, you don't feel like there's ever going to be that kind of problem. But as Chris, as you just pointed out, we do get sick and things do happen, and it's impossible to accurately predict and manage that risk for yourself. So an income protection policy that's what it's there for, right? That's what it's doing. In terms of things like cost, I know it's a bit of a how long is a piece of string, but what are those kind of costs that you might typically associate for an income protection policy?
Yeah, I mean, it'd be difficult for me to sit here and put an amount on it because, like I say, there are different options, but I can certainly explain, the main factors that will influence a premium. Yeah, age is definitely one. Of course, if you are in your 20s, 30s in good health, you don't have a high risk occupation, you could probably get an income protection product that is relatively within budget and not too expensive. But like I say, that can massively then be dependent on your medical history. So if you've got medical conditions, pre-existing conditions, which are likely to impact your ability to work, those factors may well increase the premium. High risk occupations as well. So generally when you take out an income protection product, it's based on your occupation type, and there's normally like 3 or 4 types or classes, and those basically go up from kind of your admin office colleagues in the first class, so that's your lower risk, and then it goes up more significantly, which will impact the price, where number 4 is more kind of people that might work on oil rigs, work abroad, maybe dangerous countries, that sort of thing. So it really can change quite a lot, but generally there are different options within the product as well, which influences the size of the premium. So the first is generally that you can go for like a 2-year kind of option, where basically if you make a claim on income protection, that policy will pay out each month for a maximum of a 2-year period. And because there's a maximum limit on that, it generally keeps the cost down a little bit. There are other insurers out there that offer kind of 3 and 5 year options. Of course, the longer that term, the more expensive it's going to be, because there's a higher chance that policy will pay out for longer. And then you've got full term options, which is generally going to be the most expensive, which is where, if you took out an income protection policy today and you were signed off work next week and you're off work for 20 or 30 years, for example, and that's how long the policy ran for, you could claim for it for that entire duration. And it's that risk which has a big impact on the premium. The final bit that can impact the premium as well is the deferment period. So that's a period of time that is set between a claim getting made and when that policy starts. So if you're someone that works in an industry where you get 6 months full pay, well, an income protection, you wouldn't need that money to necessarily start paying out until 6 months in, which then keeps the cost down a little bit. Whereas a policy which starts paying out after a week or after a month, because there's a higher chance of it getting to like a payout stage, the premiums are more expensive. So I guess my guidance really is to, speak to an expert and talk through your specific goals and aspirations and what your individual needs are, and the whole occupation stuff that will all come alongside it, and that will dictate what that premium ends up being.
Yeah, so I think people might be aware of the name Cavendish online, particularly because you have a long-standing relationship with people like Martin Lewis and MSC, right? And just tell us a little bit about, what does Cavendish do? What's your part in the process of getting an insurance policy?
So we're essentially a protection brokerage. Okay, so we're not an insurer. We're kind of the middle men, if you like. So effectively, clients can find us through, like you say, Martin Lewis's Money Saving Expert, and basically link through to our website and through a hyperlink, and that lands clients on our initial page. Clients can then they can choose how they wish to buy, so they can either buy online for our online journey, and going through that journey basically means that we charge an upfront fee, admin fee, but then we strip out commission, which makes the premiums really affordable for clients, for that whatever level of cover they're going for. But the client can also decide to speak to someone. So we've got a guidance team who can, on a non-advised basis, guide a client through all the options that are available. So they can't advise or recommend what the customer should do, but they can give options and, just basically, discuss what's available. But if a customer does want advice or a full recommendation, we've got a fully advised specialist advice team who can actually provide full recommendations. And generally, customers that have got significant medical conditions who may struggle to be insured through various different insurers, this team are really well equipped because they've got whole of market access, so every insurer they can access, and they can speak to the insurers that may specialise in that particular set of medical conditions. As a business, you've been running 25 years. We've got different routes to buy, and we've been really successful over that period of time, which has been fantastic.
And that's quite, it's quite important, isn't it? I had my own experience a few years ago when I was looking at getting life insurance and income protection, where, for many people who are fit and healthy and young and have their career, and there's no sort of untoward factors there, you can get these products in a pretty straightforward way. But actually having access to advice for those who need a bit more specialist help is quite important, isn't it? From my own experience at the time, where I was looking to get life insurance, but actually I was quite overweight. I've actually lost quite a lot now, thankfully. I was told by insurers that I wouldn't get cover because of my BMI. Now I'm within the cover level, fortunately, but actually at that time I could have gone to a broker who had more kind of specialist advisors who could have helped me to find a policy. So that's kind of the consideration there, isn't it?
It is a consideration, yeah. And we've also got options that don't ask, we've got providers that are on our panel who don't ask any medical questions. So we can always find cover. It will come at a price because, of course, if there's no medical questions, that's going to come with a higher premium, of course. But, generally we can always find an option for people, which is a good place to be in. But we'll put the time and effort in. We'll research. We'll do many phone calls, emails to various insurers to see what their stance is on a particular customer's medical, situation, and we will, put those recommendations together, put them to the client, and see what the client wants to do. But we go above and beyond where we can to try and get that customer covered.
Yeah. Chris, have you? I can't remember. I'm not sure if we've ever discussed this, but have you ever looked at getting life insurance, income protection?
I do have some life insurance, and I do also have some critical illness cover. But I think I made a bit of a mistake when I initially signed up to it because I don't think it's risen in line with inflation. So the level of cover 10 years ago when we first got our first mortgage, my wife and I, Tanya, seemed fine there to last us for a year if one of us fell ill, kind of thing. And now you're looking at it and going, I'm not sure it would cut the mustard. So I'm actively looking at trying to look into that again. And then the income protection conversation is quite interesting. And I don't really know why I haven't considered that. I take your point before, Ed, around saving up is not a very efficient way of making sure that you've got a bit of a buffer, but that's been my preferred way of doing it. I think maybe because you're like, well, if it doesn't happen, then at least then I've got a sum of money that I can use for something else. If I could find the right policy that would, cover me in the right kind of way, then I think it's something I would consider as part of all three of those things being in place. I need the life insurance for my mortgage, and I've got 2 young kids and my wife, and want to make sure that, at the very least, the mortgage were paid off if something were to happen to me. Critical illness, look, 1 in 2 of us are going to get cancer from what I understand in our lifetime. It just seems like a no-brainer that there should be something in there for that. But the income protection is something I just kind of went, well, I'll muddle on through myself. And actually, looking at, I know it's not a great barometer, but I'm going to say it anyway. If you look through kind of LinkedIn towards the end of this year, I was looking at a lot of personal posts in my sort of extended network of people who have had a really, really tough year when it comes to business and when it comes to income and when it comes to that kind of thing. So it's probably sharpened that thought a bit more in 2026 for me, which is like, well, actually, we want to make sure that all bases are covered and in my financial bug out bag or box or whatever it may be. And that's the one that's missing. So
it's interesting. It's interesting. I mean, I almost feel like you and I are opposites in that sense then. Because I had this conversation with Ellen as well at the time. Actually, because look, she's a nurse. I'm the guy who does the money in the household for obvious reasons.
What are those?
Well, she just lets me get on with it. But with this kind of stuff, you want to have a discussion about it, right? So I talked to her about the life insurance and I explained, okay, well, the life insurance is, it covers the mortgage if I die, and then you don't have that problem. And she was like, nah, don't bother. I'll just sell the house and move back in with my parents and take the kids with me. I was like, okay, all right, fine. But then I explained the income protection. She was like, no, definitely income protection, because if you are too sick to work, but you're still here, we are then stuck in the house and have to pay the mortgage somehow. I'm not taking you to live with my parents if you're sick. It's like, what's this very real talk?
Yeah. Also, there's a lot of logic in that, to be fair. I mean, I don't know, maybe it's the way that I've been sort of trained in my financial services brain. But yeah, maybe that is, I'll just sell the asset. What are you talking about?
I mean, we have the benefit of the fact that her parents are close by and they have a big enough house that were our house to burn down tomorrow.
Touch wood.
We could just go and stay with them. And we have that kind of support network, which is really important. But the thing is, right, is not everybody has that support network. And that's why you have to consider these kinds of products, and why I recommend considering these kinds of products to anybody who's kind of got it in their heads. Ollie, on the life insurance, do you see much of a split between people who get the kind of whole life policy or just the mortgage policy? Because I mentioned that there, and there is that variance, isn't there, with them?
Yeah, I mean, we don't tend to do a huge amount of whole of life, generally because the premiums for that will be significantly more expensive because it's offering that guaranteed payout. So most customers will have a set term, whichever term they feel that they're most comfortable with and what they need. I mean, the way in which we approach it very much is that we will speak to a client about individuals' needs across their mortgage, across their family, and across their income as well. And what that leads to is a really nice conversation about plugging each protection gap with an individual product. So customers rarely walk away from Cavendish with one big product to cover multiple different needs. We normally would look to sell like a mortgage-specific policy, which decreases in line with their repayment mortgage, so they're not paying more than what they need to for that product. And then the need for family is very different, right? Because you don't want that policy decreasing. You want that guaranteed payout, really, so it's not decreasing. So that's when we'd look at level term options. So not only does the mortgage get paid off with that mortgage product, but an additional lump sum is then left to Mr. or Mrs., for example, which will be left to the family. And coming back to your point earlier, Chris, about the inflation point and it losing its value, we do speak to all of our clients about adding indexation to it, which holds the value, which means that over time the price might go up slightly, but then so does the cover amount, which means that obviously you don't risk that amount eroding over time. And then we obviously talk about IP and critical illness as well, because the vast majority of clients need a bit of everything, like we've already mentioned. So it's just trying to find that balance, keeping it within the customer's budget, but really focusing on value, because I think people get so tied up in knots about price, and think less so about actually what the benefit is of having this cover. So we don't ask a customer necessarily what their budget is. The price is the price. Let's tackle the products that you need. Let's protect those protection gaps that you've clearly got, and let's see what the price comes out at. If it's too expensive, absolutely fine. We don't want to be selling products that are too expensive, because it's only the customer's going to end up cancelling it, months or years down the line, and they've paid that money in for nothing. But let's start basing the conversation on the value of the product rather than just price. Because the moment you ask the customer what their budget is, they're going to chuck out £10 to £15, and you're not going to get much cover for £10 to £15, especially if you're in your 40s, 50s, or 60s. So yeah, we've got to be very careful around that. And I guess anyone watching this, just try to focus on the value aspect as much as you do the price.
Yeah. For anybody who's kind of interested in going through that process, is it as easy as just you go on the Cavendish site and can you just go through the process and it'll show you some options, or how does that work exactly, and what does that look like?
Yeah, so it's very much it's down to the customer filling it all in themselves. So they would put in their personal details. I say personal details: the name, date of birth, because that impacts the price and whether they smoke or not. So they'll put in their own personal details, and then they can choose how much cover they'd like. So what the sum assured is over how many years, and whether they would want just life insurance or life with critical illness. We don't have income protection on there as an option because that's a little bit more complex, I would say. And we do have a duty of care as well, because of course it's a great option for customers that know what they're doing and they know what they want and they can just do it themselves. But it's not as good for clients who really need some guidance and some help or some advice, because they could end up buying the wrong product. So we've purposely done it for life, which is generally a much more straightforward product. But ultimately, you pass away during the term, the policy will pay out, unless you've perhaps not told the complete truth when it comes to your medical answers. So there's a little warning: always be truthful and accurate. But income protection is a lot more in depth, because it is based on those deferment periods, the occupation as well. That can really dictate things, and it only pays out a percentage of lost salary, not the full salary. So there's different kind of caveats from one insurer to the next as well. But yeah, the online journey, very straightforward, and clients who want to continue down that journey will complete their own medical application, and if they've got an accepted decision, they put in their own bank details and agree when they want their own policy to start. But a lot of customers get to a quote stage and they just don't know what they're doing, so they fall off, and that's when we then try and make contact with those clients and look to see if there's any help they want over the phone.
Yeah. Look, that's nice. It's good to hear, that process. And I will pop a link in the show notes as well for anybody who kind of wants to have a look at it as well. And from that perspective, my own experience of it is it was worthwhile, even though the first time I do actually have an income protection policy now, but the first time round when I tried doing it, even though I didn't come away with a product in the end, it was actually worthwhile going through it, even just to understand what my options were and what was available, and even ultimately what the kind of price points were going to be for me at different levels. I thought it was worthwhile going through that. So I'd kind of recommend anybody to do it. It's not going to cost you anything to just look at it, right? And ultimately all you have to say at the end of that process is, no, thank you, kind of thing. That's the kind of the worst that can happen in terms of the process anyway. But no, I think it's really, look, and it's not overcomplicating it, right? This is something that is potentially important and valuable part of somebody's, big picture survival package when it comes to the finances. It's like something that we kind of freely recommend. On Mouthy Money, we're so focused on helping people kind of build their wealth over time, enjoying it, but protecting it is so important as well. And people forget that so often, don't they?
They do. And it's funny how many times we speak to a customer and it's kind of like the question we ask them is, what prompted your inquiry today? And unfortunately, a lot of the time it's due to an event that's happened that's triggered them, whether it's a parent, sibling, friend, an acquaintance. Something has happened generally to trigger that inquiry in the first place. Unless you've got a mortgage going through where you're advised and recommended to take out a life insurance policy to cover that mortgage debt, there's a lot of people that just kind of log on and get quotes without that particular trigger. Often it's because something's happened or something that they've witnessed where they suddenly thought, actually, my own situation wouldn't be great if something happened to me, because I've not ever thought about that, especially like we said earlier, in your 20, 30, you think you're going to be fine for another 20, 30 years, but unfortunately you don't necessarily know that to be the case. Yeah.
Oh, that's really interesting. I think that about wraps us up, and I think that's a really nice point to finish on there. Chris, you going to promise me you're going to go away this year and review your cover?
Well, I have to buy 6 months worth of tin food first.
Right.
Put that in the cellar, a non-electric can opener, a torch, life supply batteries, and then I will definitely be looking at. I'll need to look at my my critical illness, because it's not fit for purpose. I think the decreasing term mortgage term life insurance feels about right, and then this income protection thing. I think I was struck by what you said, Ed. It's like, just go through the process, learn something about myself, about what the pain points are, makes you confront things about what might happen if that did happen. And as always, as we say on this show, Ed, it'll help me to have a plan, and then if you've got options about what that plan could be, then you can execute on the ones that are right for me. So that's what I'll do.
I think ultimately one of the biggest things for me, particularly with managing my own money and well, now, with a partner and 2 children and a dog and a house, and the responsibilities just grow and grow and grow, don't they? And one of the things that I make very sure to do at all times with my money at this point is just not sit on stuff, not let it just sit and rot and go and not get sorted out, because you'll never do it if you put it on a list somewhere and forget about it. it'll just won't get done. So just get on with it. Just do it. Make time in your day. You know, if I can do it with a toddler and a baby, you can do it definitely. I'm pretty sure of that. Right, Chris?
Also with a toddler and a 4-year-old. Yeah, no, we can do it.
Exactly.
Yeah, exactly. Yeah.
I think that about wraps up. Ollie, thank you so much for joining us. It's been a pleasure learning more about life and income protection. Chris, thank you as well for your interesting inputs there and perspectives.
My pleasure.
And thank you everybody for listening in. Do let us know in the comments. I mean, we want to hear from you if you've taken out these policies, what you've got. We'd love to know what your experiences are.
Or how you've used the meds, you know, like Ollie pointed out,
100%.
there's some amazing stories out there where they've come to the rescue. I'd really like to hear some of that heartwarming stuff to kick off 2026. So yeah.
For sure, yeah. Brilliant. Well, thank you everybody. I will, with that, bring things to a close. Shall see you all very soon. With that, thank you and goodbye.